95% of traders fail. But what if I told you it's not your fault? What if the system was never designed to make you win in the first place? They don't teach you this on purpose. This video reveals the dark truths institutions don't want you to know. If you're a trader or thinking about becoming one, this may change everything. Welcome to Rise from Zero, the only channel that exposes what others are too afraid to say. Today, we're diving deep into the hidden curriculum of Forex, the things the brokers, market makers, and even your favorite YouTubers won't tell you, because their paycheck depends on you staying broke. 95% of retail traders lose money, backed by broker data. This isn't a theory. It's blood, sweat, and blown accounts. But buried in the losses are the lessons that actually lead to wealth. The 7 things they don't teach you about Forex on purpose. First up, liquidity is your enemy and your friend. They teach you to follow the price, but price follows liquidity. Banks don't chase trends, they hunt stops. Your stop loss, your pending orders, are the liquidity they target. Until you learn how they think, you'll keep feeding the system like cattle. Imagine a sea of stop losses just waiting to be triggered. That's what the big players see, a buffet of retail trader despair. Next, indicators are delayed lies. They sell you magic indicators. But here's the ugly truth. Indicators lag. They react. Smart traders predict. Institutions don't use RSI. They use order flow. If you're depending on indicators, you're trading their leftovers. Picture this. While you're staring at your MACD crossing over, the smart money has already made their move and is counting their profits. Third, the brokers make more when you lose. Some brokers don't even send your trades to the real market. They are the counterparty. The more you lose, the more they earn. That's why they offer 1:1000 leverage, bonuses, and flashy platforms. It's not kindness, it's a trap. If this is opening your eyes, hit that subscribe button. This channel is your weapon in a rigged market. Fourth, trading psychology isn't a buzzword, it's everything. They say trading is 90% psychology, but never teach you how to control your mind. Fear, revenge trading, over-leveraging, all engineered by the design of the market. The market manipulates you, not just price. Imagine a trader, eyes bloodshot, fists clenched, watching their account bleed out. Now picture the calm, collected institutional trader, sipping coffee as they execute their plan. Which one are you? Fifth, smart money isn't a strategy, it's a language. Smart money trading isn't about buying courses. It's about understanding the language of the institutions. Liquidity grabs, inducements, internal range liquidity, it's not random. It's calculated and repeatable. Look at this chart. See that perfect entry before the news drop? That's not luck. That's smart money at work. Sixth, top-down analysis is the GPS of trading. Retail traders zoom in. Professionals zoom out. They start from the weekly, find key zones, then drill down to sniper entries. This is how you turn one trade a week into consistent profits. No noise, just precision. It's like building a house. You don't start with the doorknobs. You lay the foundation first. Seventh, the most dangerous place is break even. The system is designed to make you comfortable with almost winning. Break even becomes your comfort zone. You feel like you're progressing, but your account stays flat, or worse, bleeds slowly. It's death by 1,000 cuts. You're like a hamster on a wheel, running fast, going nowhere. Now, let's talk about the real secret to consistency. You want to go from zero to success? Here's what they'll never sell you, because it doesn't make them money. A proven plan. Trading one setup. Risking 0.5% per trade. Tracking every trade in a journal. Waiting like a sniper, not chasing every candle. You don't need 100 strategies. You need one that works. You don't need luck. You need discipline. This is how you beat 95%. This is how you rise from zero. They'll keep selling you dreams. But here, we build reality. If this video gives you value, share it with a trader you care about. Like, comment, I'm done being the liquidity if you're ready to trade like the banks. And subscribe to Rise from Zero, because that's exactly where we're going. But wait, there's more. Let's dive deeper into each of these hidden truths that the Forex industry doesn't want you to know. When we talk about liquidity being both your enemy and your friend, we're uncovering a fundamental truth about how the market operates. The big players, the banks, the hedge funds, the institutional traders, they're not looking at the same charts you are. They're looking at liquidity pools, your stop losses, your take profits, your pending orders. These are all just numbers on a screen to you. But to them, it's a roadmap of where the market is likely to move next. Think about it. If you know where a large cluster of stop losses is sitting, wouldn't you be tempted to push the price to that level, trigger those stops, and then ride the resulting wave of liquidity? That's exactly what smart money does. They're not trying to predict the future, they're creating it. Now, let's talk about indicators. How many times have you seen a perfect setup on your indicators, only to enter a trade and watch it immediately go against you? That's because indicators are lagging by nature. They're based on past price action, which means they're always a step behind the current market reality. The institutions? They're not looking at squiggly lines on a chart. They're analyzing order flow, market depth, and real-time liquidity shifts. By the time your indicator gives you a signal, the smart money has already made their move. The broker issue is perhaps the most insidious of all. You see, in the Forex market, there's no centralized exchange. Your broker is your gateway to the market. But what if that gateway is actually a dead end? Many retail brokers operate on what's called a B-book model. This means they're taking the opposite side of your trade. Every pip you lose is a pip they gain. Suddenly, those generous leverage offers and deposit bonuses don't seem so generous anymore, do they? Trading psychology is the invisible force that makes or breaks traders. The market is designed to exploit your emotions. That fear you feel when the market goes against you, that greed that makes you hold on to a winning trade for too long, the anger that leads to revenge trading, these aren't character flaws. They're predictable human responses that the market is engineered to provoke. Master your mind, and you've mastered half the battle. Understanding smart money concepts isn't about memorizing patterns or buying expensive courses. It's about learning to think like the institutions. It's about recognizing that every move in the market is deliberate, calculated, and designed to separate retail traders from their money. Those random-looking spikes that stop you out before the real move happens? Not so random after all. Top-down analysis is like having a bird's-eye view of the battlefield before you zoom in on your specific target. Starting with the higher time frames gives you context. It shows you the big picture, the trends, the key levels, the overall market structure. Only then do you drill down to the lower time frames for your entry. This approach keeps you from getting lost in the noise of lower time frames and helps you align your trades with the bigger market forces. And finally, the break-even trap. This is perhaps the most subtle way the market keeps retail traders stuck. You feel safe at break-even. You're not losing money, right? But you're not making money either. And all the while, inflation is eating away at your capital. The market doesn't have to wipe out your account to beat you. It just has to keep you treading water long enough for you to give up. So what's the solution? It's not sexy. It's not a get-rich-quick scheme. It's about building a solid foundation, a proven plan that you stick to, no matter what. Trading one setup until you've mastered it, instead of jumping from strategy to strategy. Risking a small, fixed percentage on each trade, so no single loss can devastate your account. Keeping a detailed journal, so you can learn from your mistakes and capitalize on your successes. And perhaps most importantly, having the patience to wait for the perfect setup, instead of forcing trades out of boredom or FOMO. This is the path to consistent profitability. This is how you rise from zero to hero in the Forex market. It's not easy. It's not quick, but it works. Remember, the Forex market isn't a game. It's not a lottery. It's a battlefield where the smart, the disciplined, and the informed come out on top. And now, armed with these truths, you're ready to join their ranks. So, are you ready to stop being the liquidity and start being the smart money? Are you ready to rise from zero? If so, hit that subscribe button, share this video with a fellow trader, and let's change the game together. Because at Rise from Zero, we don't just talk about success, we create it. See you in the next video, where we'll dive even deeper into the world of smart money concepts. Until then, stay sharp, stay disciplined, and keep rising.